everyone, or I should say late afternoon. Thank you for taking out this time this afternoon uh, for a lovely topic which we're going to cover, which is about how global shifts in 2025 are redefining REITs. Well, before I start, I'd like to introduce the co-founders at HBITS, our leadership team. First of all, Mr. Shiv Parekh, who is our founder and CEO, an MBA from Harvard Business School, business science in engineering physics from Stanford University. His background of experience has been coming from Citi and Stanford Management Company, of course, real estate development. He's Forbes Asia 30 under 30 2022, Business World Disrupt 30 under 30 2022. And I'd like to as well introduce, or of course, a lot of people would know, Mr. Samir Bhandari, who is as well part of this webinar, which will help us understand about the main topic which we are covering today. Well, just to introduce him, Mr. Samir Bhandari is our co-founder and CFO. A bit background about himself. He is a chartered accountant, batch 1987. I'm Ahmedabad 1989. He joined 1989 in Bank of America, Mumbai, Hong Kong. That's what he was shuttling between from 89 to 96. 96 to 99 September, if I'm not mistaken, Samir, you were with UBS Singapore as a managing director. 99 September, of course, 2008, you went to JP Morgan Singapore, which was further taken over by Lehman Brothers. And then you were with Nomura Securities, co-head of sales, equity research. I guess you come from a very diverse uh, knowledge of all the verticals, which will help us to understand more about the main topic which we're talking about, how global shifts in 2025 are giving this kind of implication towards REITs. I'll just move to the question. A bit about myself. To start with, my name is Abhimanyu Arora. I'm the Associate Director at HBITS. Overall 25 years experience. I've worked with banks like HDFC, HSBC, DBS Singapore, and Kotak. Uh, Graduate from Mumbai University, and I've done my corporate finance course from IIM Calcutta. Over to you, Samir. It's all about global economic capital market shifts of 2025 outlook, and of course, your inputs will be very much looking forward for this particular webinar.
No, thank you, Abhimanyu, and good afternoon, everyone. Today, what I'd like to cover is the global economy, what's been really happening, what I expect going forward, and how does it actually affect the REITs market. I'll talk a bit about global REITs, REITs in the US, REITs in Asia, and then we'll talk about REITs in India, and then of course SM REIT, which is recently been allowed by SEBI. If I look at the global economic forecast and what's been happening, the global GDP is forecasted to be at 2.8%. And obviously there's slowing growth, mainly in the developed markets. The Fed meeting was yesterday. The Fed spoke about 2 cuts by end of this year. I do think there'll be actually more cuts, though the Fed was hawkish. I personally believe that there would be at least 3 cuts this year. The economy in the US is slowing down. It's very, very clear. The jobs data which is coming out is strong, but obviously again slowing down. Inflation is pretty much in control, so I do expect them to cut at least thrice by 75 basis points. The dollar depreciation continues as people question the policies of Trump around his tariffs, against what he's actually trying to do. The dollar has been depreciating. It's actually depreciated by almost 10% this year. And I do feel this will actually continue, which actually helps emerging market currencies like in India. The sovereign wealth funds and pension funds are increasing allocation to income generating real estate assets. And I think this will actually continue going forward. Next slide, please. So if we look at global REITs, let's look at what are the types of global REITs, what is the kind of performance they're having. The global REITs actually trade actually like equities. So if you see the US markets when REITs are actually trading, if the equity markets come down, the REITs actually come down. But in India, REITs actually trade like fixed income products, and that's what I think will continue. So I'll talk a bit about that also. Obviously, the REIT market in the US and European developed countries is very very developed, whereas in India, it's in a very very nascent stage. I would say we've just started the REITs program, and I think in the next 7 to 10 years, it's going to be much, much more sophisticated. The US REITs, there is a big shift towards data centers. A lot of data centers, as you know, are coming up. The hyperscalers are putting up data centers. So a lot of the US REITs are there. Of course, there are other REITs like hospitality REITs and commercial REITs also, but a lot of the REITs is actually going towards data centers. I do think that will happen in India also over time. And the global REIT index has done quite well. Year to date, it's up 6.2%. And as rates continue to come down, I think this will also outperform. If you look at Asia Pacific, Japan and Singapore continue to be leading markets, and to some extent Australia in REITs, and mainly in healthcare and retail REITs. When I talk about retail, it's more the consumer companies like Marks and Spencer. Global dividend yields are around 3.5 to 6.5%, more like 4 to 6% across these segments. A lot more REITs are coming out which are ESG and green certified, because there's been a lot of push, especially in the European countries, for ESG certified REITs, and that I think has increased. This has attracted a lot of institutional inflows, more than 180 billion. The top performers in REITs, as I mentioned, have been data center REITs, industrial REITs, healthcare REITs in various areas in Japan and the US. So we do expect global REITs to continue to do well, especially as interest rates start coming down. It's obviously very, very related to interest rates. It's very related to, as I said, equities. The equity markets have been doing well. Interest rates have been coming down. So I do expect global REITs to continue to do well. Next slide, please. I'm a big believer that India follows what happens globally, of course, with a bit of lag, but it does follow that. So it's very important to learn from the global REIT markets to actually then see what actually will happen in India. And I think that's very, very important. The REIT markets globally is very, very developed. It's very liquid. It's very transparent. Investors have a lot of confidence in the REITs market. Of course, it has very stable income. Other than commercial real estate in the US, which went through a tough time around COVID because of work from home, otherwise REITs have done extremely, extremely well. There is a very, very high correlation with urbanization, infrastructure development, because as that happens, more and more REITs come into play. Typically, if you see, REITs have always outperformed fixed income instruments. They may not have outperformed equities, but definitely they have outperformed fixed income. They do offer, as I mentioned, there's a lot of liquidity globally in REITs. They are very well diversified. So the risk for the investor is very, very mitigated. And it's not dependent on just one or two asset classes. REITs also offer a very good hedge against inflation and back actually by a real asset. So historically, if you see, REITs have done extremely well. They've delivered returns of 9% compounded over the last 10 years, and I do feel they will continue to outperform. And I think what's very important is because they are regulated in the US, it's SEC, In India, it's SEBI. In Singapore, it's MAS. That sets the foundation for investor trust. I think regulation makes an extremely big difference of how investors perceive these instruments. Next slide, please. So the Indian REIT landscape obviously is changing, and I think it's going to change rapidly. So far, we've had 3 listed REITs: Embassy, Mindspace, and Brookfield. There's one more REIT, the Sattva REIT, which is also coming up. Here, the combined AUM is around 75,000 crores. But a lot of these REITs are related to developers. So Embassy Office REIT is the REIT of Embassy. Similarly, Mindspace is related to Rahejas. So a lot of these REITs are actually related with related parties. Whereas SM REIT, which we'll talk about later, which everybody will talk about later, we cannot actually have any related party transactions. So that's a big, big advantage that SM REIT will have over REITs. Vacancy rates have been coming down. There's 85% plus occupancy with vacancy rates sub 15. In fact, in areas like Bangalore, the vacancy rate is actually less than 9%. Pune is also around 10%. So that's been coming down. Yields are very stable. The REIT market gives 6 to 7%. SM REIT, we think, will actually give you more closer to 8.5%. One of the areas which I think has been an issue in the past is when these REITs have been listed, they've actually catered to a lot of institutional players. So a lot of the foreign institutional have been investing, a lot of the insurance companies have been investing, but they've not really catered to the retail person, the high net worth person, because the awareness has not been there. As we market the SM REIT, our focus is going to be more retail, high net worth, and less of institutional. It doesn't mean that we will not focus on institutional, but definitely the focus is going to be more of retail and high net worth. The focus in India has been for commercial offices and industrial warehousing, both extremely, extremely strong. I think the commercial office space, I think the rentals will continue to go up. I would not be surprised if rentals go up by 7 to 8% going forward, at least for the next 4 to 5 years. And as I mentioned, REITs, the investor base is very institutional heavy. It's less of retail. Retail is actually less than 10% of the investment in the public REIT market. Next, please. So how do the Indian REITs compare with other asset classes? Now, I think for any investor, I think this is an extremely important slide. And then we'll also have a slide how SM REITs actually compares. So here, if you see, I've just given a clear comparison of Indian REITs, which gave 8 to 11% IRRs, moderate liquidity. The treatment is tax as dividend, risk level is moderate, or I would say low, and some of the other comparisons. Obviously, as you can see, the REITs, I do feel, as compared to fixed income instruments, are definitely a much better alternative for a few reasons. One is, of course, the return is much better. Liquidity may not be as good, but definitely the overall returns are better. It's taxed in a much better way, and it's always backed by real assets. A lot of the other instruments are actually not backed by hard assets, and hence I do feel as an instrument, whether it's REIT or now SM REIT, over time these will outperform a lot of these fixed income instruments. Next slide, please. So what I'd like now to do is pass it on to Abhimanyu to talk a bit about what SEBI has introduced, SM REITs, to talk about the nuances of SM REITs, to talk about how we feel SM REITs is actually a game changer and a different asset class in India, which will actually benefit the retail and the high net worth. So over to you, Abhimanyu.
Thank you, Samir. It's always wonderful to take your inputs, and I always make some notes out of it. And I already have some three questions which I'll ask post this part of the webinar. What are SM REITs? Basically, if I have to create it as a full form, it's basically small and medium real estate investment trust, which is a semi-regulated co-ownership model. And it's backed by asset-backed income from leased commercial assets, or how Samir mentioned about hard assets. Democratizing institutional grade investments for HNIs and retails. How? Because if I look into this particular investment, as I've already mentioned, it is a semi-regulated asset. The ticket size of this asset starts with 10 lakhs, which automatically, helps accessible for HNIs and professionals to invest into this particular product. Returns are paid out quarterly in the rental payouts. And when we talk about property appreciation, which is basically the exit appreciation, is between 5 to 7 years. It is, of course, managed by professional asset managers, ensuring due diligence, regulatory compliance, and taking care of whatever is required to make this product right, which is done by HBIT, tax-free rental income. And that is one of the major game changer for SMEs in India. Well, as earlier, Samir compared it to how REITs as a comparison to other product. I'm just comparing SM REITs to the current traditional products or other products which is available in India. SM REITs 8% plus capital appreciation. Mutual funds would give around 6 to 8%. Bank FDs will give around 5.5 to 7%. And of course, it might go down as how the rate cuts happen. Corporate FDs 8 to 10%, government bonds 6 to 7%. Of course, SM REITs kind of outshine this particular parameter. The underlying asset in SM REITs is commercial real estate, mutual funds is debt securities, as we all know. Bank FDs is, of course, bank risks. Corporate FDs are corporate papers, and government bonds are, of course, sovereign, so it's backed by government. Liquidity is very moderate, or I should say, moderately high in SM REITs because again it's listed on the exchange. Mutual funds, bank FDs are high. Corporate FDs and government bond is moderate. In terms to taxation, if I look at SM REITs, it's a tax-free rental income which we pay out quarterly, of course, with the long-term capital gains. Capital gain tax is there in mutual funds, while we look at the other part, which is bank FDs and corporate FDs, they both fully taxed. Government bonds are interest taxed. The entry barrier, I should say, the interest, or I should say, the minimum investment value required for this particular product, SM REITs, is 10 lakhs. Mutual funds is around 500 plus, bank FDs 1,000. Well, I guess I see it can start from any amount depending on the bank. Corporate FD is around 10K plus, government bonds around 1,000 plus. Uh,
In fact,
well,
sorry,
yes, please.
AB, let me add one. If you could go back to the slide, I think what's very important to note is the taxation. The fact that you're getting 8% tax free, and a lot of the people are in the very high tax bracket of 35 to 40%.
True.
So you're effectively looking at a 11.5% pre-tax yield of an instrument which is actually backed by a hard asset and which has typically global tenants. And that becomes very powerful. And of course, the capital appreciation. Now, why is it tax free? Is basically because the way we are structuring the rental income is as a repayment of capital, and that's why it's going to be tax free. Obviously, the capital gets the reduced, and as and when we sell the asset, or as and when you sell the unit, the difference is taxed on a long term capital gain. So obviously, it's very beneficial to the investor. Over to
Very
you,
true.
Abhimanyu.
Very true. Uh, and as well, it's paid out quarterly as compared to the end of the year. It makes much more benefit in the basis points over there. Well, why SM REITs matter? That's of course the topic which is being covered everywhere in 2025. It's basically trending everywhere. Well, just to let you, it's a perfect fit for hybrid portfolios, real estate plus fixed income benefits. If you look at in India, if we talk about 100 rupees, let's say a person in India has invested 100 rupees, approximately 55 rupees is invested into real estate, and around 29 rupees is invested into fixed deposits, or let's say other alternates. So approximately 83 or 85% invested in fixed income parameters. So this is a perfect hybrid portfolio which you can actually have in your portfolio with a fixed income benefit. Lower correlation with equity markets volatility because it is again rental incomes on a quarterly basis, which is backed by a fixed rental agreement. Long-term lease contracts ensure predictable cash flows. That clearly shows that when you enter the contract or invest into the particular product, you're already aware what kind of returns you'll be generating year on year, and as well as know that what is going to be an escalation percentage why the rental goes up. Rising inflation and reduced deposit rates make real estate backed income more attractive simply because the current thing which just happened and which Samir just covered. In India, it covered around 50 basis point rate cut. So if the rate cuts happen in India, it's of course the property price tends to go up. Why? Because the prime lending rate goes down and people tend to not sell their real estate assets. So automatically the demand and supply factors help us as well to increase the prices of the particular properties. SM REITs offer yield compression advantage with future resale potential. Better yield versus traditional instruments, which you've already seen in the earlier slide. Asset-backed security, these are all A grade, grade A properties, which we are talking about, glass facade, beautiful buildings. Passive income plus capital appreciation. Compliant and transparent governance. Of course, it is regulated by SEBI. And tax-free rental income, and we have covered this in detail with the help of SEBI. Now, investor profiles. Who are these people who can invest with us in SM REITs? HNIs, ultra HNIs, seeking passive yet secure returns beyond FDs and bonds. First-time real estate investors in India and NRIs who don't want operational hassles. It's always a kind of a, somewhere in the background of your mind, is it the right property I'm buying? Is it uh, it would be not, any kind of problem that for the future, as well as for NRI customers who are sitting any part of the globe thinking that I'm in US, I'm in UK, is this the right property? So hence, in looking at that, since it's a semi-regulated product and we've already done due diligence on this product, it becomes a hassle-free investment. Well, from other angle, if we look, family offices, IFAs, and trust targeting stable tax efficient income and seeking portfolio diversification for themselves and for their clients is a network which we can be as we looked at. Investment advisors looking to diversify client portfolios with asset-backed options. Working professionals seeking higher yield than fixed income products. These are basically, if you look at people who look forward to invest with us. Samir, I like to put across this particular thing because we had created a slide which was addressing investor questions as frequently asked questions. So I'll be like a customer and probably ask you a few questions. Is my capital safe?
Oh, absolutely. Capital is very safe because these are pre-leased commercial properties. They are ready properties. They have tenants already there. Typically, the tenants are AAA, either multinational tenants or listed companies. So absolutely, the capital is extremely, extremely safe.
Okay. And what if I need to exit early?
Given SM REITs, the fact that SM REITs are going to be listed on the exchange, so it's either going to be listed on NSE or BSE, so you can exit in the secondary market anytime. We do expect over time the liquidity to actually also increase. It's already starting to happen, and we expect that liquidity will increase quite a bit as we go forward.
Sure. And Toti mentioned, right, because we as well see that in the future, it might, it says 10 lakhs now, the entry barrier might as well go down to as low as maybe 5 lakhs or 1 lakh in another 3 to 5 years. The next question is, how frequent are payouts?
As we had mentioned earlier, SEBI has directed that the payouts be quarterly. So all the renters net of expenses will actually be paid quarterly to all the investors.
What are the risks, which is basically the primary question of each and every investor.
I would say the main risk, given the fact that we look at the tenant quality, we look at the building, it's really the tenant vacancy. And we do try to mitigate that by taking at least a 6 month deposit and at least taking a 6 month notice period. But this, I would say, is really the only real risk as such. Because what it then means is, if for any reason the property say is vacant for 3 months, you will obviously not get your rent. But having said that, your principal still remains safe. So the principal is not going anywhere because the principal is invested in the hard asset. So it's really the tenancy risk.
Right. And of course, is this semi-regulated?
Yes, as SEBI has regulated HMITs. April 1, we got a license, and we are working towards an SM REIT IPO.
Great. So before I just move on to the closing of this particular, where of course Samir would like to give input, I would request all the people in this webinar to even put in their questions so that we can answer at the end of this particular presentation. Well, over to you, Samir.
No, thank you, Abhi. Just to
Okay.
summarize, obviously, the global markets are very volatile. In the US, we have seen tariffs. We have seen global geopolitical tension now with Israel, Iran. But this asset, because it's always backed by a hard asset, we do think this is one of the best asset classes to invest in. And the Indian market is definitely maturing. I do feel in the next 2 to 3 years, this market will become a lot bigger, probably grow 10 times. And the SM REIT market, which I think will plug the gap, especially for retail and high net worth individual, which was not the case. As I mentioned earlier, REITs typically cater to institutional players. SM REITs, we will cater to retail and high net worth individuals. And as an asset class, which gives much better returns than fixed deposits, mutual funds, AAA bonds, and backed by a hard asset, so it's fairly safe. This we've already discussed. To summarize, I honestly feel SM REIT is going to turn out to be one of the best asset classes. The range is obviously from 50 crores to 500 crores. I'm sure over time, SEBI will allow us to go even beyond 500 crores. But definitely as an asset class, as a tax-free instrument, I do feel this is probably one of the best asset classes which has been introduced by SEBI, and it will definitely help all the investors coming in.
Very true. Uh, One question before we just move to the next slide or probably the Q&A round, which might give a bit of emphasis for as a question which just came to my mind. Back in US, Samir, there are approximately, I guess, 194 REITs, right? And in India, we have the 4 REITs which are listed, and fifth which is coming on, which is Satwa. Uh, 194 versus 5. What do you think that probably in the next 5 years, what could be the kind of number which one could expect from India, how it's going to be emerging?
So I think the REITs will probably, you'll have publicly listed REITs, maybe 3 or 4, maybe 5 more, but you will see a lot of SM REITs coming up.
Okay.
There are really 2 players, PropShare and us. And I do feel that we will be coming up with a lot of SM REIT IPOs. So you will see a lot of schemes coming through us. We are targeting AUM of 10,000 crores in 4 years and 2,000 to 2,500 AUM in the next 2 years. So you will see us coming out a lot more, especially once our first one is done.
Sure. Thank you. I'll just move to the Q&A. So I have a first question from Vidya Sagar Krishna Chigri. asking, the rent is tax free. Yes, the rent is tax free because the way we return rent is a form of return of capital. Hence, it becomes a tax free instrument. Again, the same question Amit has asked, how is a tax free rental income? So I've answered this question already. Shifali Sisodia happened to ask, you mentioned that the rental is tax free. Okay, I guess we just talked about rental tax free. Shefali Sisodia again, my statement shows deduction which is include TDS. Well, at this moment, as we speak, your investments are under the fractional ownership investment. Moment you invest into SM REITs or they are migrated to SM REITs, it will all become in that particular instrument where it will be a different format altogether. So we just spoke about SM REITs at the picture at this moment. So I'll just leave this question to you, Mrs. Sarang Savarkar. I happen to ask, how many years will get high yield fixed?
Sorry, Sarang, I didn't understand this.
Yeah.
Understand this question. If you could type out and clarify this, because how many years will get high yield? I really did not understand this.
Uh, Culp Financial happened to ask, is there any offer for financial advisors if they recommend this to their clients?
Absolutely, absolutely, and please get in touch with us offline, and we can talk to you around that.
Great. Mr. Vipul Soni, what about partnership firms? Can they invest? Yes, they can. Just to let you know, individuals, HNIs, individuals, HUFs, NREs, NROs, all individual bodies, trust can invest into this particular product. Girija Kamagna Hilly happened to ask, what is the locking period? I joined late. Sir, there is no locking period for this particular asset class. We can choose to exit at any given point of time when it comes to SM REITs. Shifali says they happen to ask again, for the existing portfolio, would the rental payouts move from monthly to quarterly? Yes. When we migrate to a particular to the SME, which is approximately a process from maybe around 4 to 5 months from now, we will surely look forward to that particular new functionality, and we will of course inform you in advance. Gaurav Vaishnav, so I'll put this question to you. Please elaborate again on tax-free rent piece. So, Samir, again, I guess everyone wants to hear it from you.
Sure. So let's take Gaurav. Let's assume you've invested 100 rupees, and let's assume your rental is 8. So you will get. We will return this 8 quarterly to you, 8% per annum. So you will get 2 rupees every quarter. At the end of 1 year, you would have got 8 rupees, which would be tax free. But your capital would have gone from 100 to 92. In the second year, you will receive again 8 rupees tax free, and the capital will go from 92 to 84. If you decide to sell your unit and your price, your actual value is 84 now, but you sell it for 120, then the difference between 120 and 84, you will pay a long-term capital gain of 12.5. Similarly, if you sell it after 5 years, your value would have gone down by 40 rupees. So your actual capital would be 60. And if you sell it for 120, then your capital gain will be on 60 at 12.5.
So just to add on this point, I did a maths on this particular on an Excel sheet, considering two particular points: 100 rupees invested, and the asset being sold at 150, and 9 rupees I'm paying out every year, versus current scenario and the future where return is. So as per the old scenario, my net income was coming post tax was around 173 rupees 25 paisa after the 12.5% long term capital, everything. And in the new scenario, when we do return of capital, the value of net income was coming around 182 rupees point some paisa. So it was approximately 8.25, which was up, which is of course a very tax efficient thing which we're looking at. So there is a question from Mr. Malav Sherdalal. How there will be capital appreciation? Over to you, Samir.
So typically capital appreciation happens for a few reasons. One is, of course, we have rent escalation, which is typically 5% every year, or after 3 years, you have 15%. And commercial buildings get sold on a cap rate basis. So, assuming no compression, capital or no rate compression, that 8% you will receive in year one will become 8.4, the second year will become 8.8 or 9, and as goes up. But when you sell the asset, you'll probably sell it at 8 again. So the escalation you will actually capture, say, by 5% per annum for 5 years compounded. So that's one. Second, capital appreciation happens because rates have compressed. So if when the RBI starts cutting rates, that also helps you because overall rates come down, fixed deposit rates come down. Typically, cap rates also come down. So that also gives you appreciation. That's second. And thirdly, as rentals go up, right, there's a lot of demand. There's a lot of GCC demand coming through. So rentals are also going up. So that is also helping the capital appreciation. So there are 3 or 4 ways where you can actually get capital appreciation.
Noted. So I have a question from anonymous attendee. Can you show the investment breakdown structure for 5 months? Just to let you know, sir, ma'am, whenever we happen to do or propose any project, in advance there will be a breakup given. Having said that, I will request to reach out to your investment manager at AgeBits, and he'll be able to share any example of your current asset which you have done in the past. A question from Mr. Manoj Chabria. Why is there cess and GST cut in my payouts? Uh, GST, no. Cess could be on the TDS. GST is not possible, sir, because what we are receiving at the current structure is the interest income on which the GST is not applicable. For people who have invested with us, a simple way to look into this is when you go log into hbits.co website, please go to the icon which says analytics. When you click analytics, you can choose the month. It will automatically show an Excel sheet view what part of what the payouts which you have received, your rental inflow, your rental top up, what is the TDS amount. It's full, clear, transparent Excel sheet for your viewing. Mr. Malav Shedalal Habnar, how will we grow as we are SM REIT? Over to you,
So
sir.
Mala, we will be launching different schemes. So say our first scheme under SM REIT will be say 200 crores or 250 crores. Then we will launch another scheme. So we plan to launch 4 to 5 schemes, or in fact, sometimes even more every year. So if we do say 250, 500 crore schemes, so we will continue to grow. So this will just keep adding up. So each scheme, it could be a building, it could be 2 floors with different tenants, and that's how we plan to grow.
Right. So I guess the question, the answer which you just gave is followed by a question by Mr. Sandeep Dontam Shetty. To mitigate the risk of tenancy vacancy, can a mix of multiple assets be clubbed into one product?
Yeah, absolutely. Sandeep, you're absolutely right. Definitely, we can do that. Or we can buy a building with different tenants. So absolutely, this is what we plan to do going forward.
Shmoon Tolkawala happened to ask, are the rental yields insured against any inevitable risks to the investors?
So the only way you can mitigate it is really one is the rental yields are fixed, right? Typically, we fix it for 3 to 5 years. So at least for that tenor, you will not have a problem. Secondly, we make sure that the building which we are buying or the floors which we are buying are very central, and we expect the rentals to move up. Thirdly, we do a thorough study of where the rentals should be, and in fact, we are now using AI to predict rental yields also. So we are using a lot of these instruments internally to make sure that the risk is mitigated. But to be honest, if suppose by any reason the tenant leaves and the property is empty for some time, that risk the investor will have to bear. Obviously, we will continue to make sure that we find a tenant very quickly, But that's one risk which can remain, which would remain, if you were owning a property also, that would be the case.
Very true. So I have a question from Mr. Ajay Venkatesh. Can one consider this as a good retirement option to earn consistent monthly return?
Absolutely, Ajay. I mean, I do feel this is very, very good. And given the fact that it's going to be tax free, obviously it helps. Though for retirees, that may be maybe not as beneficial, but definitely as a consistent monthly return, absolutely. And we obviously don't promise any capital gains, capital appreciation, but we have seen in the past that we've been able to get IRRs of 14 to 15%. So that's what we try and achieve. So, but to answer your question, absolutely.
And just to back that up, so there was one asset which we had exited in which we had mentioned the targeted IRR to be 15.54 and we were able to deliver 17.54%. So coming to the next question, which is by anonymous attendee, which assets that are you planning to list and approx yield?
So we are looking at assets across Mumbai, Bangalore, and Pune initially to list. We have a few options. We are doing due diligence. So we will definitely be in touch with you. Asset sizes could be anything between 150 crores and 50 crores and 500 crores. But definitely we are looking to list soon. And Vidya, to answer your question, as soon as we have that option, we will definitely be getting in touch. This will be there will be an SM REIT IPO, and you will have to invest through the IPO route.
There's a question from Sai. I saw that the return would be 8% plus capital appreciation. What is capital appreciation?
So effectively, Sai, it's we buy the asset at 100. We typically expect appreciation to be between 5 and 7% per annum, and for the reasons which I mentioned earlier. So yeah, typically, but we obviously don't promise anything. But 8% definitely is the rental income, and then 6 to 7% is typically capital appreciation.
So we have a question from Amit, which actually part A. First question from Amit is, what is the management fees? What second is what is the role of edge bits? So I guess Samir, you can take it forward from there.
Yeah. So what is the management fee? Typically is 1% per annum. Sometimes we reduce it, but this is indicative. We could reduce it to 0.5% also, but typically it's 1%. What is the role of HBITS? HBITS is an asset manager. We identify the property, we do the due diligence, we prepare the note for SEBI, we appoint the merchant bankers, we manage the property going forward, and as and when we have to exit, we exit the property. So our role is that of an asset manager, and we will put 5% sponsor capital into the property, which has been suggested by SEBI. In case of vacancy, do we lose rental or the insurance will cover it? There is no insurance to cover the rental as such. So as an investor, if the property is for any reason vacancy, yes, you will lose the rental. You said rental payment will reduce capital. How is that possible? You mean to say that our capital is depleting, or is it intact? Your capital is intact, absolutely. The way we are structuring it to show that capital reduction so that it becomes a very tax efficient structure in the hands of the investor. With rental escalation, when rentals go up, absolutely, typically 5% per annum or 15% in 3 years. How easy are the exit and how active or liquid are the secondary markets? The markets have definitely become more liquid. These will be listed on the exchange. And I do feel over time that liquidity will improve massively. Is there any entry fee? No, the entry fee is basically in the IPO. You will be subscribing to the IPO, getting in your allocation, and you'll be allowed to exit or buy anytime you feel like.
Right. So I have another question from Amit HL. One important question. On the premature exit, I understand that these are listed, but at the time of selling, will the market price of the REIT really be in line with the actual perceived asset price? I have my doubts that exiting on exchange the most likely be a loss-making proposition compared to actual exit of the asset. Uh,
Uh, I sorry. So I don't think so, Amit, because the way I look at prices, right? You know that you are accruing 8%. Suppose the rental is 8%, you are going to get 8% in a quarter. So typically, if you see if the asset was at par at the end of one quarter, it should be actually trading at 1 or 2, and then it should fall again as you get paid. Obviously, we will be also giving the NAV of the asset once a year, as told to us by SEBI. We might do it more often also, but we have to do it at least once a year. But I do think I don't think it's going to be a loss-making proposition because there'll be a lot of buyers when and it actually falls below par. Because again, it's like I said, it's a very lucrative asset.
well, just adding a point to what or the last two questions. Generally, what are these assets which we are picking up? These are all grade A properties in which the tenants are A grade tenants, like Lightsoft, Microsoft, which we have done in the past, Toyota, which we have done in the past, um, Foundever, Citel, ICICI Bank. These companies tend to choose a long term lease. These are the kind of companies which come here and pay the rent. So they have to as well take care of their reputation. Yes, mitigating the risk to a level of not 100, could be 90 the possibility. In addition to the question which was mentioned, loss making. So just to give for overview to each and every person on the forum, we invest as in the investors should look at this particular proposition for 5 to 7 years, right? We have to submit the valuation report every year to SEBI. So the NAV would change after 1 year in that particular platform. In between, if there is a kind of a bit here up there, that is because of dynamics of supply and demand. But one should look forward to stay invested for this particular product line at least 3 years. And of course, highest is the much better because you need to give time to the property to appreciate as well. Anonymous attendee, the question is why we are not merging all assets and making a full bag of one and list of main REITs. Miss, over to you.
Main reason being because SEBI has regulations, and and also what typically happens is if you merge a lot of the assets, one, SEBI does not allow more than 500 crores. That's one. Secondly, especially for new assets, if you're buying, the sellers are very different, right? So they may have different nuances. So then it's not easy. For the existing one, if it goes above 500 crores, again, SEBI does not allow. And so it's mainly related to the regulations of SEBI, which we follow. Agnish said, what will happen in natural calamity like earthquake? Typically, insurance will cover these calamities.
Hmm. Neha Jan, hello, I've joined late. I want to know how to invest in this asset. Well, of course, ma'am, you can visit hbits.co website. We have created the particular way how to, or you can surely reach out to the investment manager at hbits. And as well, look forward to follow us on LinkedIn, where we are surely going to be announcing in a few weeks from now on our launch of the IPO, SM REITs IPO.
But just to mention, Sneha, it is going to be an IPO. So you just follow the IPO process and
Exactly.
invest in the property.
Vinay W happened to ask, are you targeting all kind of properties, residential, commercial, warehouse, hotels, or just office spaces?
So it's mainly, I would say, no residential. It's going to be warehouses, commercial spaces. We may look at hotels also, but definitely not residential.
Rahul Kumar, client will get what is the security? What is security? Will it come in DMAT or what? Yes, it will come in the DMAT form and you will be able to see that. And as well,
Yes.
of course, it will be listed on the exchange, so you'll be seeing that particular.
Yeah. So you'll get units in a scheme. It will be in DMAT form. So yes, that will be your security.
Vikram Saloke, sir, if rents are returned as capital, won't that lower capital of investor, and how rental yield will happen to investor?
Again, Vikram, as I mentioned, your capital goes down for efficiency of tax, but you continue to receive the same rental and the escalation of the rental. So this we have proposed. So, but you'll have to pay long-term capital gain, which will now be much higher than in the normal case. But because a long-term capital gain is 12.5%, you benefit, and because you'll be paying only as and when you sell, the time value of money also goes in your favor because you will not be paying taxation on a quarterly basis.
Our taxation partner is ENY, whom we are working very closely with. We'll surely put that in the scheme before you invest, and you can look at that particular scheme. It's much more tax efficient as we speak right now. Uh, Mr. K. Pramod Happy, is this investment has any lock-in period? No, it does not have any lock-in period. You can choose to exit at any given point of time. Shamoon Dholakwala, can you advise what is the time frame of the exits SM REITs IPO? Well, I like to know that as well, Shamoon.
So we are looking at a few properties as we speak and doing due diligence on it. My guess is in a couple of months' time, we should definitely be launching it. But the due diligence takes time, and the fact that it's going to be our first IPO under the new scheme, that's the reason it's taking time. But once first one is done, the second, third one will be very quick.
Uh, Anonymous secondly, the question is what is the investment management fees charged by investment manager for managing SM REITs?
It's typically 1% per annum, and sometimes we reduce it to 0.5% also.
May Hinge happen to ask any additional compliance for NRIs?
I guess the only compliance I would say, Amy, is as an IPO, you are investing in an IPO. So whatever compliances you have for investing in IPOs, that's really it. So I'm a non-resident, and I invest in IPOs through my NRO account or NRE account. So I've never really had a problem. In fact, I'm a foreigner also, so never really had any issues as such.
Question from Anonymous Tendi. Can you show the investment breakdown if someone invested 10 lakh for 5 years? Well, we'll show the breakdown. It will be available on the website, and the IPO will have the breakdown before you invest. But still, a request you please get in touch with the investment manager at Edgebits, who can take you through a bit more in detail. Shalini Bhatia, join late. Is the recording available? Yes, we will be sharing the recordings to everyone on this particular platform who's registered with us for the webinar. Understood. Thanks. Anonymous Tendi. Hello, I have joined. I want to know how to invest in this asset. Same question.
Yeah, I'll say it's the same question. Yeah.
Yes. Is it same as Embassy REIT listed on Indian Stock Exchange? Well, just to put across, there's a difference between REITs and SM REITs. Okay. Just to give an overall view, SM REITs is basically 50 crores to 500 crores, and REITs is basically 500 crores to 5,000 crores. So the Embassy or any other 4 REITs which are listed currently on the exchange are all REITs. SM REITs is basically from HBITS, which is just coming on the way. And anything to add up from your side, Sumi?
No, that's it.
Perfect. Mr. K. Pramod Hijab, once we invest, how soon we start getting the rental income? Well, moment it is listed and how the IPO, dynamics of IPO goes and settlement is done, it is allotted to you. Every quarter, the rental income will start for you.
Amit, and basically, yes. No, I guess the question is also how soon. So once the property is registered, which typically once the money comes, it will be a week, 10 days time.
Noted. Amit, on getting the rental income, how does capital value go down? Not clear.
Yeah, we've explained this. Yeah.
Welcome, sir. Okay, if capital gone reducing, it's the same question. Padman Gopal, how long does it typically take to find a new tenant for a vacated property or asset? Just to let you know, Mr. Gopal, our acquisition team looks forward to such property, and how we mitigate the risk is that So let's say, given an example, I'm just taking one example. Let's say I'm picking up a property in Mumbai. So I look out for BKC or Andheri East, commercial hubs, right? Commercial hubs where there's always an interest to go for a commercial property and not a residential location. In addition to this, I'm only looking out for grade A property. If you look at India, there's a huge a very less supply of grade A properties. So if overall structure, it becomes easy. But yes, if the tenant has to leave, they have to as well give us a 6 months notice period, and we would have as well collected a security deposit. So in that particular time frame, I guess it is very much manageable. But if it is not, there is still a loss of rent, but the capital of property which is invested stays intact, and it is truly getting appreciated by the year. Mr. Vidya Sagar Krishnajanvi, is our investment gets listed and trading in stock markets? Yes. But it should be, as a suggestion, I would say it should be traded as a kind of a long-term investment before 5 to 7 years. Amit, why would anyone buy someone worth 40 after capital reduction owning the rentals for 120? Technically, all renters are also taxed as long-term capital gains eventually. When my capital reduces, do my units also go down? So, you want to answer something or shall I?
No, it's basically the same thing, and we can take this offline. I mean, we've discussed this, so I don't want
Right,
to go, but
right,
we can discuss this offline. We have a
sure,
note from ENY also, which can explain clearly.
true. Where the income should be shown in ITR, be shown in ITR under rental or other income for exempted income?
Exempted income.
Exempted. Vikas Shinde, physical certificate or registration copy does gets to the investor,
It's in your demat account.
demat form. Uh, if investor keeps his investments, one day his investment would be zero. By the way,
Absolutely, Vikram, you're right, and this is what we've structured it in the tax, effectively to give the investor the benefit.
let's say if the value of the SM REIT goes from 10 lakhs to 9 lakhs in 3 years, value of SM REITs, okay. So will rental income now be 9.2 lakhs, 9.2% of 9 lakhs?
So
No,
the rental income, Abdul, will be the same as we have suggested, right? So if it's 8 rupees on 100, and in 1 year's time it's 8.4, that will remain the same. So if you take your capital value, which has gone down, then absolutely the income, the rental yield will actually go up. But your
then
rental will remain the same, which has been stated.
question from anonymous friendly. When can we expect the IPO, any ETA?
We are looking around August time.
Amit, what is usually the clause of tenancy case of lockdown or unforeseen?
Uh, so far, Amit, that's actually a very good question. We've not had any issues so far. In fact, COVID time also we were managing, but we made sure that our tenancy agreement is very tough and it favors the landlord. So far we've not had any issues and we've collected 100% rent.
Just to add in a point to everyone here, so I was one of the first employees at HMIT. Well, during the COVID time, forget about negotiation, which our tenants would have come. Indeed, there was not a single day delay in the rental payouts. So the contracts have were very strong. Our lawyers at Trilegal, Amarchand Mangaldas, Shaudan Muslim. These are the tenants which look at the contracts, watertight agreements, and they make it very clean and clear for both the parties. How soon we start getting the rental income once we invest? We answer this question. Prakash Pawar, lease for how many years and how many tenants guarantee and how tenant guarantees?
Typically, the lease is for 3 to 5 years, and the tenant guarantee is basically the quality of the tenant. So we have tenants like Toyota, Microsoft, and they are very highly rated tenants. So we don't expect them to default. Similarly, ICICI Bank is also one of our tenants. So that's the kind of guarantee you have, the quality of the tenants.
So is the 8% fixed? What if the rental yield is actually 10%?
So if the rental yield is 10%, then you will get 10%.
Exactly.
8%, we are just saying it as a example.
Example. Uh, Satyog multi-stage. I don't know what this is.
No, it's
Mm,
basically this Sayog Multi-State Cooperative Society Bank maybe provides 11 to 12%
oh,
on FD, but obviously that's the risk you take, right? A lot of these people
true.
over the past have gone down. In our case, it's 8 to 9% rental plus capital appreciation. In
Right.
this kind of FD, you obviously take the risk of the Sayog Multi-State Cooperative Society also.
I'll just take in last two, three more questions. We've
Yeah.
already passed the time of five. We have five to. How much should we want to allocate to this segment from an asset allocation POV?
So the way you could look at it is uh, part of your fixed income portfolio you could park here. Uh, I've always believed that typically the 60. So for retirees, the fixed income portfolio is much higher, maybe 60, 70% of fixed income. For other people, typically it's 40%. So my suggestion is overall you should look at 10 to 15% of your portfolio to be allocated here. It can be even more, especially as the liquidity improves over time, because then it becomes a very liquid instrument and you can exit anytime. And which I think will happen over time. So as liquidity improves, you could actually allocate even more. Let's take the
Uh,
last question, one question more, maybe.
to make this investment, do we need a registrar with any specific broker, or can be done via offline mode from HBITS?
Yeah, you can have a broker account with your broker who can then coordinate with the merchant banker and invest. If you want to come in direct also, that's also fine.
So I'll just take the last question. TDS can be refunded via tax filing, Mr. Manoj Chabria. Yes, it can be refunded if you're not in the tax bracket. If you're in a zero tax liability, in advance, you can submit the 50GH form in the current ownership. While we move to SM REITs, I don't think so. It's going to be taxable because we are moving to a tax-free regime. Well, I'll just take a pause on this now. Well, again, since we are at 5:04, it was a great session. It was a great session with too many questions. It always welcoming. And we look forward to if any people, any customers, any investors, any strategic partners over here would like to have more answers to it, please reach out to their investment managers at HPIT. We look forward to answering you one to one as well. Thank you very much again, Samir, for being part of this webinar, which you actually gave us a great input how the global REITs have in lines to the SM REITs in India. So it's a
Thank you.
great future for SM REITs, what I purely see, uh, considering the 1.3 trillion market of US into the US REITs versus 7 billion is currently in India. I think there's a way to go. Look into it.
Absolutely. I totally agree, AB. And,
Mhm.
and I look forward to working with our investors. Thank you so much for attending and thank you for your time. Cheers.
Thank you very much. Thank you, everyone. Have a great day ahead, guys.
Bye.
Thank you very much. Bye.